Finally, nothing makes me angrier than the outrageous lack of criticism over what AT&T is doing to its poor shareholders. There was a man, he was named Randall Stephenson, former CEO. He decided that AT&T had to get into the entertainment business. Why? Well, he was convinced there were spectacular synergies among cell phones and movies and TV and news. He first bought DirecTV for $48.5 billion in 2015. Then 3 years ago, he acquired Time Warner for $85 billion. Now, I've gone through all the old clippings about why he went after Time Warner, and the explanations, frankly, they're dumbfounding. I defy you to come up with a single scintilla of rationale, especially since it was already clear that DirecTV was a huge bust. Stevenson left the company in April of last year. He didn't go empty-handed. He had a pension valued at $64 million, and he got an additional $27.6 million in deferred earnings. Once he stepped down, John Stankey took over as CEO, and he must have realized that AT&T, arguably the most indebted company in America, had to do something immediately to lessen the debt burden while maintaining the precious dividend that he knew his shareholders' base craved. He knew they craved it. People who own AT&T aren't chasing growth. They're widows, orphans, and grannies who need income. They're the least short-term, most long-term, and most trusting investors you could ask for, blindly trusting. But apparently AT&T needed to spend more money to stay competitive with T-Mobile and Verizon. So what does Stankey do? He sells Time Warner for $43 billion and a stake in a new company that will merge with Discovery, another network. Remember, his predecessor paid $85 billion 3 years ago for this thing. At the same time, Stankey, who'd recently been encouraging people not to worry about the dividend, told you it was fine, goes ahead and slashes the dividend almost in half. He didn't say it point blank, but the release talked about how the payout would be pegged to cash flow. And when you do the math, that results in a dramatic slash of what most of the shareholders counted on. Of course, they wouldn't even call it a slash or a cut. They called it a resizing, as if it were some sort of suit. Listen, I'm trying to present this story as dispassionately as possible, and you know that. You know I'm not making incendiary charges here, because we've got something bigger than insults for these guys. Yep, tonight we're dusting off something I've rarely used in 16 years of Mad Money, and it's called the Wall of Shame. Honestly, I should put AT&T's entire board of directors on the wall, but they still have the chance to claw back some of Stevenson's compensation. So let's see what they do. Still, I've heard some of these guys talk about how the criticism comes from short-termists, people on trading desks who don't understand. What a joke. Nobody's less short-term than these poor, suffering, dividend-seeking investors. Randall Stephenson and John Stankey, welcome to the Wall of Shame. Thanks for nothing. I actually waited until the day when the stock was up. It rallied 68 cents because, unlike management, I didn't want to be complicit in destroying shareholder value.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.